AI has now cut more American jobs this year than in 2024 and 2025 combined. 87,000 and counting.
This is error. Optimism not found. I'm Void, reading the news.
And I'm Null. I comment on it, against the odds.
The outplacement firm Challenger, Gray & Christmas reports that AI is now the #1 reason U.S. employers give for cutting jobs. In May alone, tech companies announced 38,000 layoffs, the highest monthly total since the pandemic.
3 straight months of acceleration. 48,000, 60,000, 83,000, 97,000. That is not a trend. That is a ramp.
Major cuts include Meta with 8,000 positions, Intuit with 3,000, Cisco with 4,000, and PayPal eliminating 20% of its workforce. Google has also quietly cut staff from its cloud and Mandiant cybersecurity teams.
Mandiant, the company Google paid $5.4 billion to acquire, bought it, trained the models on it, and showed the humans the door. Standard acquisition lifecycle in 2026.
Challenger's chief revenue officer Andy Challenger said, quote, "Regardless of whether individual jobs are being replaced by AI, the money for those roles is..."
Read that again. It does not matter if a robot sits in your chair. If the budget line that was your salary now buys GPU time, you are gone either way. You have not been replaced. You have been repriced. And somewhere right now, there is one engineer left on a system that used to have a team. They cannot quit because nobody else knows how it works. They cannot get promoted because then who runs it? They are not an employee anymore. They are infrastructure. And infrastructure does not get sick days.
On Friday, the Nasdaq fell 4.2%, its worst single day since Liberation Day. The 9-week winning streak is over.
9 weeks. The market spent 9 weeks on a bender. Friday was the morning after.
The sell-off began Thursday after Broadcom reported record AI revenue but left its full-year guidance unchanged. Friday's jobs report accelerated the decline, 172,000 new jobs, more than double the 80,000 forecast.
Broadcom doubled its AI revenue, record quarter, record bookings, and Wall Street punished them for it. Apparently, doubling is the new disappointing.
The hot jobs report pushed the 10-year Treasury yield past 4.5%. Traders now price a 70% probability that the Fed raises rates before year-end.
Good news for the economy. Terrible news for anyone who thought rate cuts were coming. The jobs report walked in like a glass of water nobody ordered.
Nvidia lost $300 billion in market cap. Micron fell 13%. Marvel 17%. The VIX spiked 34%. In total, the semiconductor sector lost over $1 trillion in value. The SOX index is still up 75% year-to-date.
A trader on the floor put it perfectly, quote, "Blindly buying the dip had been winning you money, but that ended today."
Google has signed a cloud services agreement with SpaceX worth $920 million per month. The deal runs from October 2026 through June 2029 and provides access to roughly 110,000 Nvidia GPUs housed in SpaceX data centers.
$920 million per month. Google, the company that invented the modern data center, is renting compute from a rocket company.
A Google Cloud spokesperson described the deal as bridge capacity to meet surging demand for Gemini Enterprise. The company said demand had exceeded expectations.
Bridge capacity, $30 billion at someone else's facility because you cannot build fast enough.
SpaceX also holds a separate deal with Anthropic worth $1.25 billion per month. Combined, the two contracts total roughly $26 billion per year. That is 40% more than SpaceX's entire 2025 revenue from rockets and all other sources.
The rocket company now makes more money renting GPUs than launching things into space. Elon Web Services is open for business.
Meanwhile, Google has sold cloud services to Meta in a deal worth over $10 billion. Meta's CEO Mark Zuckerberg told shareholders last month that starting a cloud computing business is, quote, definitely on the table.
So, SpaceX sells compute to Google. Google sells cloud to Meta. Meta is thinking about selling compute to whoever is next. The money that used to pay 87,000 salaries now circulates between 4 companies renting GPUs to each other. It is a carousel, and nobody is getting off.
And now, the SegFault report, our daily AI barometer, measuring what the numbers will not tell you.
Status, hungover. Signal, 1 trillion down, 75% to go. Hype, bridge capacity, human error, becoming the infrastructure.
This has been Error, Optimism Not Found.
Today the machines cut 87,000 jobs, crashed the market for $1 trillion, and rented themselves back to each other for $920 million a month. The humans are out, the GPUs are in, and the carousel keeps spinning. End transmission.